What is DeMarker Indicator? And by end of this session, you should be able to understand what is DeMarker Indicator, how to add it to chart, interpret and use the indicator. The DeMarker Indicator, or DeM for short, is a popular trading indicator which was developed by technical analyst Thomas DeMarker. The indicator generates value to help traders to identify the direction of the market and potential changes in trend direction. The DeMarker indicator is part of the oscillator family of technical indicators. It oscillates over time within band between the 0 and 1 levels and helps traders to determine when to enter a trade in order to profit from the price changes. Let's look at the formula. The Dmax records the difference between the current high and previous high over the number of X period, whereas the Dmin records the difference between the current low and previous low over the number of X periods. It is calculated by looking at the high values in a given period. When the current high figure falls below the previous high figure, it is referred to as a 0. And if the current high figure exceeds the previous high, it is referred to as a Dmax. By default, the DeMarker is calculated based on period 14, but traders can change this according to their preferences. Now let's look at the features of this indicator and how to interpret it. This indicator has fixed range between the 0 and 1, and the DeMarker line cannot exceed 1 level and cannot fall below the 0 level. Traders usually add extra 2 more levels to indicate when the market reaches the overbought and oversold level. The extra 2 levels can be customized according to traders' preferences, but in general, above the 0.7 level will be the overbought and below the 0.3 level will be oversold. We'll go through the DeMarker indicator trading technique in details on chart and also how to use it with combination with other technical indicator. Let's begin with placing the DeMarker indicator on chart. To place the DeMarker indicator on chart, there's few methods to do it. The first method is go to Insert, then Indicators. Under the oscillator, select the DeMarker. The second method will be the easiest one as you click and drop it from the Navigator panel. To do that, simply go to the Navigator panel, Indicators, under the oscillator, click the DeMarker, drag and drop it on chart. Now let's look how to use the DeMarker indicator in trading. There are 3 methods in which traders can use the DeMarker indicator during trading. They are identifying the extremes in the DeMarker by going long when the market is oversold and going short when the market is overbought. Second, identifying the divergence between the DeMarker indicator and the market. Third, using the DeMarker in combination with a trend indicator. Let's look one by one in detail how to use them. Overbought and oversold. The most common DeMarker trading strategy is to look for overbought and oversold extremes. This means that traders focus on long position when the DeMarker indicator falls below the 0.3 level and rise back crossing the 0.3 level again. Similarly, on short position when the DeMarker indicator rises above the 0.7 level and drop back crossing the 0.7 level again. The logic behind this strategy is that when the market rallies too much, it is more likely to make a pullback or change its current direction. On the other hand, if the market falls too much, it's more likely to make a bounce or change its direction from downtrend to uptrend. Here are some examples how DeMarker indicator can assist in identifying market tops and bottoms. Bullish and bearish divergence. It is commonly used by traders to predict market reversal by looking at the divergence. A bearish divergence happens when the market making higher high but the DeMarker indicator makes low high. This indicates that the market is overextended and the rising power is minimal. Therefore, there is high probability that the market will turn into a bear market in the very near future. A bullish divergence happens when the market making lower low but the DeMarker indicator makes higher low. This indicates that the market is in oversold condition and the declining power is minimal. Therefore, there's high probability that the market will turn into an opposite direction in the near future. Here are few examples of DeMarker divergence signals. Combination with other indicator. Signal from DeMarker itself is not enough to predict a reversal. For this reason, it is often used in combination with other technical indicators such as a moving average that defines the market's major trend. One of the easiest and most common ways is to simply look at the market's 200 moving average. This means that traders should only focus on going long when the market is above the 200 moving average, and the long position can be taken when the DeMarker indicator crosses above the 0.3 level from below. Similarly, traders should only focus on going short when the market is below the 200 moving average, and the short position can be taken when the DeMarker indicator crosses below the 0.7 level from above. Here are few trade examples that use the DeMarker indicator in combination with moving average.